Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me to the new start of this week. After many bearish indicators coming through for the Australian dollar, it would seem that the market has survived for another week of not selling off. With the 60-day moving average, the close in New York was above there at 78.40 with the level being 78.20. We're still not out of the forest as of yet when it comes to the bear case, but still pressing that way though. As you can see from a technical point, the indicators are still breaking down, and from the start of this morning we are a tiny little bit softer. The initial target for this week still holds to 77.45.65, with any advances given as a sell opportunity towards 78.80.85. Overall, I expect to see the Australian dollar to remain bearish. Like the euro, market still looks destined to test that neckline, which was confirmed from the bearish double top reversal last week, along with the bearish outside range day to the euro and the bullish outside range day for the dollar index. The dollar index also has a neckline that comes in at 90.40, so a little bit more leeway to the upside for the dollar index, but nevertheless patterns hold the same. So therefore I do expect to see the weakness for euro to continue. Now for this week we do have quite a bit of data, and to start with we've got Mario Draghi to speak at the Monetary Affairs Committee in Brussels. He would probably try and avoid any talk on inflation and also about rate hikes, but nevertheless he will be questioned on it. It'll be interesting to see what his answers are. Along with this, we also have the Fed Chairman Jerome Powell, who takes off from Janet Yellen and will make his first appearance as chairman in front of the Senate committee at his first semi-annual monetary policy report for this Tuesday and Thursday. The market will be very keen to see what his thoughts are on rising inflation, and may also include the kind of pace of the rate hike that we're looking at. So keep an eye on Tuesday and Thursday. Overall, for the euro, I'm looking for a move towards 122.70. Now, a break of this neckline does give further confirmation down towards 118 as a target. Sell into strength or resistance at 123.75.80 as a cap. For those trading dollar yen, the market is still bullish in my view, and from the technical point should still press higher towards the region of 107.75, even though it was respected. We could see a break from there and look up towards 108.25 and then up towards the region of 108.70.90, and that's where I think the market will start taking profit. Dips on the short term, 106.65 as a buy. Well, the pound was a little bit mixed on Friday. It did sell off briefly before the news article come out, but the Bank of England Deputy Governor David Ramsden sounded more hawkish and has switched his view from dovish to the hawkish bias after saying he sees the case for a rate rise somewhat sooner than later. The market was a little bit spooked by those comments and did climb a little bit from the lows, but nevertheless, for the start of this week, I expect to see the market sell off due to the technical implications. From the uptrend that may hold, as you can see clearly, does come in quite firm on the dailies, around that 136.80 level. I do expect to see eventually a market rise to the 140.60 level. For those trading gold, I'm not overly bullish. I still think the market can sell off towards that bullish foundation that comes in around 1,300 and figure 10. Overall, the immediate target comes in at 21, then down to 18. Any advances should foul towards 34 to 37. Silver outlook also looks relatively weak and could actually see a test down towards $16.40 and reassess from there. From the technical point, you can see the midway level was rejected on the RSI, and also the stochastic holds to a negative bias along with the MACD. So little upside coverage will likely be sustainable and see the resistance cap around 70. And rounding off with oil, well, the market is staging a little bit more bias to the upside after clearing $62 on Friday. With a 64.50 target now in place, we could see further challenges up there, but I'm very skeptical purely for the fact that the weeklies are still negative. So we could see a strong rejection from there. So do be on your guard if you are trading from the long side. So that wraps up for today. Thank you very much for joining me, and I hope you have a great start to the new week.